The global economic rivalry between China and the US has reached a new level, and this time China's target is clear: the US dollar. Behind the scenes, China banks are making some bold, high-stakes bets against the dollar, potentially shaking up the world's financial systems. This is not just some minor maneuvers. China is playing the long game, pushing for a financial revolution. Let's dive into how China is taking on the US dollar, why it matters, and what it could mean for you and global markets. Before we get into the juicy details, don't forget to hit that like button and share this video if you are finding this topic intriguing. China's financial institutions are not sitting idle. They have placed more than $100 billion in short positions against the US dollar. Why? Because they are betting that the dollar is going to lose value, and they plan to cash in big time if they are right. One of the tools they are using is foreign exchange swaps, a pretty complex financial instrument, but essentially it's a way for them to hedge and make profits as currencies fluctuate. How do FX swaps work? Let's break it down. Chinese banks swap their local currency, the yuan, for the US dollar at the beginning of a contract, locking in a set exchange rate. If the dollar dips in value, by the time the contract ends, the American counterpart owes more yuan than they initially received, which means a win for China. This tactic is not only stabilizing their currency, but also bringing in decent returns, around 6% in some cases. Now, while this sounds like a win-win for China, there are risks involved. If the dollar strengthens instead of weakening, China could take a financial hit, but so far Beijing is showing no signs of backing down. Quick break here. If you are following along and have any thoughts, drop them in the comments below. I'd love to hear what you think about these high-stakes moves. Why is China so invested in this? China's central bank is driving this strategy. They need to stabilize the yuan, which has been struggling due to a slowing economy. Their goal is clear: to keep the yuan strong while simultaneously weakening the dollar's global grip. They are even merging two state-backed brokerages to create a $230 billion financial powerhouse, signaling their intention to compete more directly with Wall Street. This isn't just about making money, it's about shifting the entire global financial balance. And this brings us to the bigger picture. China's been working hard to reduce its dependency on the US dollar, a process known as de-dollarization. In fact, over half of China's cross-border payments are now being settled in yuan, a massive jump from just a tiny fraction in 2010. China's partners in BRICS are helping them push this agenda further by increasing trade in local currencies and reducing their holdings of US Treasury bonds. And it's not just about currencies. China is also stockpiling gold, which now accounts for nearly 5% of its total reserves. By diversifying away from the dollar, China is positioning itself to weather any future financial storms that might hit the US economy. All of this spells a potential threat to the US dollar's status as the world's dominant currency. As China and its allies reduce their reliance on the dollar, global demand for the greenback could drop, potentially leading to inflation and weakening its power in global markets. And with countries like Saudi Arabia showing openness to accepting other currencies for oil trade, even the petrodollar system could face challenges. The implications here go far beyond China and the US. This de-dollarization movement, especially with the support of BRICS and other developing economies, could reshape global trade. These countries are developing new financial infrastructures that could use local or digital currencies for international transactions, making them less reliant on the dollar. As the world watches China's financial maneuvers, one thing is clear. We are on the brink of a significant shift in global finance. China is playing the long game, and the outcome could redefine how money moves across borders. Don't forget to give this video a thumbs up, and if you haven't yet, be sure to subscribe and ring the notification bell so you don't miss any updates on these unfolding global developments. Thanks for watching.